Hello everyone. Today I got an email from a customer asking if there are any videos of pullback trades on the Jigsaw site, and I thought surely there must be, so I had a look, and apparently there aren't. And one of the things we do talk about a lot on the site is the pullback trades, using the swing charts, using the volume profiles for pullbacks. So what I thought I'd do today is put the video recorder on and record a few trades. Now obviously what's happened today, if we look at the volume in the top left, just before the open, we're now 80,000 contracts below average for the day. It's very, very slow. So really the chance of there being a pullback trade obviously today very slim. So what I'm going to show you today is a trade from the open. And there is a video on the site. We've done a webinar at a few places called Day Trading the Open, or Trading When You Shouldn't. And what we can see here, we've got these X's, and these X's denote the volume. The 1X is not much volume, you can see there, but the 3 or 4 X's are places of significant volume overnight. And what we're expecting to happen is to get some kind of a hold or a bounce off those zones as we go into the open. So what we're going to do is just skip forward a little bit to just before the open and have a look at the action and just have a look how we could trade that. So here we are just before the open. We can see 43.50 and 46.50 are really the boundaries of where we had what we consider lots of trades. So what we're going to do, we can see we're about to open. We're definitely going to open within the range. And so opening within the range, we're looking for bounces off the extremes. If we'd opened up below the range, we'd be looking for a bounce off the low of the range. What we can see straight off the open, we've already tested the low once. It was a bit of a quick test, and so normally I wouldn't take a trade that quickly. Sometimes I do, but sometimes you get a bit more absorption, a bit more activity there that lets you get into a trade. So what we're doing now, we're just waiting for either the market to come down and see some absorption, or the market to move up to the top and see something worth taking there. Again, we've moved down. Doesn't seem to be a lot of willing to trade into 43.75, 45 contracts last time there. Again, not really seeing anything to fade just yet. I can tell you that eventually we did actually take a short trade off the top. I am narrating over a recording here. Could have taken that really, could have taken that pop down. But again, there's plenty of time with these things. You don't have to take the first trade. What we can see already, which is good for one of these trades, is that the Dow and the Nasdaq are doing different things. Volume's still low. So if the Dow and the Nasdaq are doing different things, that means you've got a good chance of range-bound behavior. So fading any move down or fading any up move isn't really going against a trend, because there isn't a trend and there isn't likely to be a trend, not until the Dow and the Nasdaq start doing the same thing, until the volume picks up a little bit. As we're going to see, after a few attempts at the bottom, we've now had a pop up to the top. So look over on the Vista chart now and on the bid and offer profiles, and we can start to see we've got some absorption, slightly more buying than selling there. So we've actually got sellers that have absorbed there. The offers kind of stepped up, 1,200 contracts absorbed. So that's a good signal. That means they're temporarily holding the market. Down the Nasdaq still not aligning, still doing different things. So basically now trying to stalk an entry to get a short trade. We can see a little bit more absorption there, another circle, 1,000 contracts. We've had a little pop-up, nothing to worry about, a little pop-up. So we take a short trade, and obviously what we're looking for is to try and get to the opposite end of the range. So we're trying to get the other X's. Now, on a day with higher volume, where you had the Dow and the Nasdaq kind of cooperating, you might actually scale out to the opposite end of the range and actually keep some contracts for a runner. But on a day with really low volume like this, really not worth it, not likely. So here we are waiting for our first target. And we've got the first target there. And we can see that we're building a little bit of volume here, a little volume area, tiny little volume area from 45.75, 46, 46.25. We've got some volume. Not exactly what we want to see. We want to see it run down. So we've had a little push, kind of didn't get much past 45.50, just 9 contracts. So watch as we push down again. Now, of course, I'm always close to having my finger on the trigger at this point. because it could pop up very quickly, could pop through, and you don't want to let it blast through. Although it's not the kind of trade where you want to have a break-even stop either. So I like to kind of manage these dynamically, not put a hard stop in. Again, not really getting anywhere. Come down to 45.50. Not getting anywhere through it. So basically what we're going to do, move the second stop and try and get a little bit more. Second target, sorry. Try and get a little bit more out of the trade. You can see now over 800 traded at that price. Okay, 1,000 traded. We've got a fill. And looks like we're really not going to get pushed down to the opposite end of the range. So what we've got is we've got our little pop. We've got the area holding. We got some absorption by the sellers. Got a little pop. Didn't get any follow through, which is perfectly fine. Happens quite a lot with this kind of trade. Plus we're in a market that's a bit undecided. We can see the NYSE tick actually going up, and the down the Nasdaq actually starting to cooperate a little bit. And there's a trade. So again, with these trading the open trades, sometimes you get just a little pop. Sometimes you get a nice run. You've just got to actively manage the early part of the trade until you've got some breathing room in the trade, and just not let them run against you. If it's a trade you take on a regular basis, it's really going to pay off to not let them run against you much, and to just really focus on cutting a trade, not taking big losses, and then just running the ones that actually work out nicely. All right, so that's all. Thank you.